Do you think we're approaching the levels where people should start to become cautious?
Well, the reason that people are buying stocks in reality is not because of a recovery. It's because of the cheap monetary policies that central banks are pursuing to create the illusion of a recovery. So it's the cheap money that is driving people into stocks. It's not economic growth or it's not enhanced earnings. And ironically, I think the sector that should have benefited the most, mining, has benefited the least until, you mentioned recently now we're getting a nice rally in the gold sector so far, not only today, but this year. I think it's the top performing sector. Gold stocks as a group in 2014, they might be up about 9% already since the year began. But I would expect those gains to accelerate as people begin to appreciate the reality of the situation, that we have a phony economy, that we have a bubble blown by the central banks, particularly in the United States, where we're not going to get a real tapering. We're going to get the Fed increasing the amount of monetary stimulus, not because it works, but because they're desperate. As the U.S. economy slips back into recession, the Fed will fight that with even more QE, and that might help lift the stock market, but it will do more for gold.
Peter, I've got to disagree with you, because if I look at the data, and even today in the UK we had strong retail sales numbers, the stock market goes high. This is not a market concern about stimulus being removed here in the UK. And if you look at it stateside as well, the market was concerned about the weak payrolls number. So that should have been the opposite reaction. I think this is a market that's normalising. It's starting to react the way it should.
No, I mean, look, the U.S. stock market was going up with blinders on in 2005, 2006, 2007, as the Federal Reserve was sowing the seeds for the 2008 financial crisis. People who are buying stocks are oblivious to these things. They are ignoring the bad news. They're focusing on what they believe to be good news. And I'm a lot more worried in the U.S. than I am about Europe or the U.K. for that matter. We have got much bigger problems here. We have got an economy completely addicted to quantitative easing, and not only is it addictive to the QE we have now, but we need ever larger doses to maintain the illusion of economic health, even as the actual country deteriorates as a result of the QE that is actually toxic for the real economy. Maybe it makes the stock market go up, but it undermines the actual economy, which only sows the seeds for more QE, which will be even more destructive. But sure, if you want to buy stocks, it's better than owning dollars,